I'm Luke Alexander, President and CEO of Newcore Gold. Thanks for joining us today. I guess, first of all, I'll highlight, similar to everyone, we'll be making some forward-looking statements. Newcore Gold, we're advancing the Enchi project in Ghana. It's a district-scale exploration project that's fundamentally underpinned by very robust economics that we outlined in a 2024 PEA, which we're now in the process of taking from PEA to PFS and all the de-risking work that goes along with that. It's important to flag we do trade on the TSX as well as the OTCQX, and management and board are truly aligned with shareholders through our 15% ownership in the business. This is stock that we've bought alongside shareholders over the last number of years. We are, as I mentioned, moving the project from a PEA to a PFS, and Ghana is a Tier 1 jurisdiction with a number of multi-million-ounce deposits along the Sefwi-Bibiani belt from us. My background is I spent the first 20 years of my career on the investment banking side of the business, 12 years in London covering all the big global natural resource funds out of the UK and Europe. Important to highlight that 4 of our board members are actually board members of Equinox Gold today. Our founders, Doug and Blaine, have been behind some very successful companies, including Newmarket Gold, Calibre, and now Equinox Gold. From a capital structure, corporate snapshot perspective, we've got a very good capital structure, 263 million shares outstanding. We currently have $10 million in the bank with an additional $10 million of cash, which will come in with the exercise of warrants between now and the end of February, 4 months from now. Important to highlight, everything I'm going to talk about today does not require that additional capital to come in. So our 45,000 meter drill program, as well as our PFS, is fully funded with the cash that's on the balance sheet today. We are also very strongly institutionally held, 55% institutional ownership today. A number of you will recognize these as some of the largest investors out there. And for anyone who receives research from Canaccord, Haywood, or SCP, I would encourage you to speak to the analysts there and read what they have to say about Newcore. They're all very bullish on the company. In terms of Ghana, it is a Tier 1 jurisdiction to be operating in. We are fortunate to have amassed the land package that we've got today when we did. Ghana is Africa's largest gold producer. It's the 6th largest gold producer globally. It's very important for the economy. It's important for the tax base. And for us at Newcore and other companies in country, it means there's a huge skilled labor pool for us to ultimately leverage off of. But what I always say is don't listen to me. At the end of the day, I'm a single asset biased CEO. But look at what the major mining companies are doing in country. You've currently got 4 of the top 10 largest gold producers with significant operations in Ghana. Newmont being the largest, Anglo, Goldfields. Zijin is the most recent to come into the country with their $1 billion acquisition of Newmont's non-core asset in country, the Achim asset. Newmont is then investing an additional $1 billion into their Ahafo project, which will make it the 2nd largest gold producing mine of theirs globally. So again, I think all of this speaks to what a Tier 1 jurisdiction it is. And then we've seen a lot of M&A in Ghana as well, which also highlights the desire for companies to get into Ghana. In terms of the geology, it's been called the Gold Coast for over 1,000 years, and that's because of the prolific belts that exist in Ghana. You've got the Ashanti Belt, which has some of the largest deposits on the planet, including Obuasi at 66 million ounces, Tarkwa at 25 million ounces. We're then situated on the Sefwi-Bibiani Belt, right on the southern end of that belt in Ghana. Good neighbors along trend from us, including Chirano at 5.5 million ounces, Bibiani at 6.5, and then there's that Newmont mine sitting at 20 million ounces and growing. So very large deposits along trend. When we talk about district scale, obviously our neighbors is one of the reasons we talk about that district scale, but also I would flag that we've got a large land package, 248 square kilometers in size. To date, we've only drilled on 9 of 25 targets that we've identified across the project. So lots of opportunity for us to continue to grow the overall size of our resource. In terms of some of the recent drilling that we've been doing, we'll go through that, and then I'll talk about some of the district scale exploration upside that we're excited about. In terms of some of the recent drilling, we are in the midst of a 45,000 meter drill program. A big part of the focus of that initial results that we've put out have been focused on infill drilling, which is one of the key things to take us from a PEA to a PFS, converting ounces from the inferred to the indicated category. So with this 29,000 meters of drilling that we've released thus far, we think we've accomplished that infill piece. And now with the second phase of drilling, we're focused on more pure exploration type drilling, which I'll talk about in a minute. Within this infill portion, we've also had some real standout results. Here, for instance, 204 grams over a meter. That's our highest grade meter intercept ever on the project. This intercept here, I would actually argue, is even better given the widths of 28 meters and 3.4 grams. Within that, almost 8 grams over 11 meters. So we've had some real standout results within this infill portion of our drill campaign. We're also thinking that with the infill portion, we might get a bit of resource growth as well, which would be a real added benefit for shareholders. Reason I talk about that is when you look here, these are the pits that constrain our resource today. What we then did with a number of the holes is we actually pushed them beyond our existing 1650 pits, and in this case here, ended in 0.8 grams over 28 meters. So within the holes, we've accomplished our goal of infill drilling, but we've then pushed a number of these holes beyond the existing pits, and that's where we think we could get some resource growth as well. Looking at these intercepts here, 288, 289, 94, 95, 96, 97, you'll see all of these intercepts go beyond the existing pit walls, ending in mineralization. The impact of that is very clear when I take you into the 3D model here. Those cross sections we were just looking at are from our Boeing deposit, which is our second largest deposit on our project. When I take you in and take the blocks off of this model and we zoom in a little bit so you don't have to squint too hard, these are the 1650 pits that currently average only 80 meters across our project. The infill was accomplished within these pits, so converting the ounces we're looking to ultimately convert. But then those holes I was referring to, 94, 95, 88, 352, as you can see, they've intercepted mineralization sitting outside and below the existing pits. So this is where we're hopeful that we may be able to add some ounces as part of our infill campaign. The other thing that we're excited about at the moment, now that we're on to our phase 2 portion of the drill program, so that resource expansion, pure exploration drilling, is the opportunity at depth. What we're looking at here is a long section of our Enchi project. We're then comparing it to the Chirano mine. What we've done is we've superimposed the average vertical depth of our pits, which, as I mentioned, only average 80 meters today. When you look at that 80 meters across our project and you compare it to Chirano, for example, which is our closest neighbor to the north in Ghana, where you see a lot of these greenstone-hosted deposits really grow in size and increase in grade, is once you start to identify these high-grade feeder zones. One of our covering analysts put out an interesting report that looked at both Chirano and looked at Ahafo. And from the initial resources they put out 20-odd years ago, both of those resources have grown by 5 and 6.5 times. And the bulk of the growth have come from these high-grade feeder zones. Historically, we've only drilled about 45 deeper holes into the project, so very limited drilling, but we have started to have some success, which points to the high-grade, potential feeder zones that exist on our project. Looking here at Niam, for example, you can start to see where these high-grade feeder zones potentially exist. It's important to highlight that we've only drilled 15 deeper holes here at Niam. To orient you, again, these are the pits that average about 80 meters across our project. Below those pits, we've hit 5.8 over 7, 5.6 over 8, 5.4 over 9, 6.5 over 4. So if Greg Smith, our VP Exploration, was standing here, he would start to talk about how we've hit one of these high-grade feeder zones that will ultimately extend at depth, similar to what we see at our neighbors along trend from us. 500 meters to the south of that, we've hit some very nice results as well. 3.2 over 9, 7.4 over 8, 3.5 over 9, 6 over 6. So we're excited for the first time in a number of years to be back in here drilling some deeper holes, which we think could create some outsized return for shareholders. We're also drilling at our Boeing deposit as well as drilling at our Seum deposit, some deeper holes to chase some of these high-grade structures. That's the exploration side, and I could argue with you that all of the exploration on our project you get for free because of the fundamental underpinning of value that there is within our PEA and the re-rate that we're expecting as we take it from PEA to PFS. In 2024, we outlined a very simple open pit heap leach operation within a 340-page PEA, which you can go onto our website and have a look at if you're interested. There's also about a 30-page presentation on there dedicated to the PEA. Looking at the project and the economics at a $3,000 gold price, you're looking at an after-tax NPV of $970 million, after-tax IRR of 136%, nice production profile of 122,000 ounces per year over a 9-year mine life, and one of the things that obviously helps drive the economics is the low capex required for a heap leach operation. From a cash flow perspective, we've got very strong cash flow for the project. At $2,350 gold, you're looking at $855 million of after-tax cash flow. At $3,000 gold, you're looking at roughly $1.3 billion of after-tax cash flow. $140 million in year 1, $150 in year 2, $130 in year 3. So very strong cash flow for the project. Simplistically, if you're looking for leverage to the gold price, our project offers that for investors. For every $100 move in the gold price, our project adds roughly after tax US $50 million to the NPV of the project. At a $3,000 to $3,500 gold price, you're looking at $970 to $1.2 billion of after-tax cash flow, after-tax NPV, 136 to 170% after-tax IRR. So very robust economics for the project, which again, as I mentioned at the start, creates that fundamental underpinning of value. Today, if you look at it, we'd be trading around 0.1 to 0.5 if you use a $3,000 gold price. And we're expecting, as we take it to PFS, that we can create a fundamental re-rate for shareholders. Layered on top of that is the district scale exploration that, again, I would argue investors get for free today. So in terms of news flow, catalysts for the company, as I've mentioned, we are in the midst of a 45,000 meter drill program. The first phase was focused on that resource conversion. We're now focused on that true exploration upside. So lots of drill results to come over the next 6 months. And then all of that then feeds into the PFS that we're looking to get completed in the first half of next year.